As you rightly mentioned there, we have seen also a lot of optimism coming back into the Nairobi Securities Exchange, hitting a new 4-month low for the main share index, but we'll be discussing that shortly with the market watcher. Let's have a look at the currency, whereby we saw the Kenyan shilling posted at 85.2535 to the dollar on Friday, which was a 5-month low, and the shilling is expected to remain under pressure on the back of dollar demand from oil importers and manufacturers. On the stocks on the other hand rose to a 4-week high, buoyed by anticipated half-year earnings from the banks, while the benchmark index jumped 1.3% to close at 4,720.53 points, a level that was last seen in June 17. The all-share index, on the other hand, rose 3.5% to close at 121.39 points. With us in studio, we have Geoffrey Maina. He's a research analyst with Old Mutual Securities. Many thanks for joining us. Now, the activity that we're seeing in the stock market, we've seen also foreign investors coming back. On Friday, we saw activity rising to about 77% of purchases. For you, what are some of the key highlights that you see we're likely to have this week?
Actually, that's a very positive trend that we've seen returning in the market. Previously, we saw foreign investors, which they help to drive our market a lot. Previously, they were on an exit trend, but right now they are coming back. As we saw, the NSE 20 closed the week at 47.20, which was a 2.9% appreciation from last week's, the previous week's close. That aside, also you expect, even with the banks expected quarterly earnings release, it's expected to drive the market up again. Yeah, because the Kenya banking sector, they're always posting good results. So yeah, investors, they're trying to leverage and position themselves to take that.
Staying on the track of banks, if you look week on week, Barclays Bank was the top gainer last week, gaining above 6%. It was followed by KCB, which was up 5.8 thereabout, and then Equity Bank. Is this a cue of how the results might also be?
That's a positive cue on how maybe their results, their quarterly results, they are going to be. If we just take a recall, if you remember Equity, KCB, when they did their Q1 release, they had very impressive performance, and it was even translated in their share price. We saw Equity and KCB, actually they were one of the gainers on a week-to-week basis. They appreciated by around 4% and 5% respectively. Yeah, given that trend, we expect this to go on.
All right. Staying on the track of earnings, we saw BAT yesterday announcing an 11% rise in profits to about 2.2 billion. For you, was this anticipated? Is it good or bad in terms of the performance?
For BAT, that's a very impressive performance. We know BAT, it's a global company, and even as the company mentioned in their earnings release statement, it was from plant optimization and also just to keeping a capping on their financing costs. We saw the turnover half year, it was up 4%, and the PBT, it was up 11%. And even this was partly attributed to higher sales and even higher pricing that the company, you remember last year they did a review of some of their product prices.
But if you look at their net sales, it was net revenues were actually flat.
Exactly, but now they kept in on their financing and operational costs. So yeah, because a 35% reduction in financing cost on half on half, it's a very impressive. It's a very impressive move.
Let's look at the regional market, whereby we saw them closing the Ugandan plant the other day, saying that they're going to come to bring that their production into Kenya. But then again, if you look at the Egypt market, where we've seen a lot of turmoil there, and it's a country that they export to. Looking at their regional strategy, what are your thoughts on that, in line with those two companies, those two countries? Sorry.
If you look at BAT, their current plant in Kenya, as the company puts it, it's enough to cater for their export market needs. So it was just a move for the company to try to close Uganda operations and try to leverage on the export angle. But now with the current turmoil in Egypt, that might have an impact on the companies, because you know Egypt forms part of, it's one of the largest markets for BAT in terms of export earnings. Yeah, so but hopefully things will stabilize in Egypt, and maybe for the company they'll be doing their full year release. We expect them even to do even better.
Okay, how do you see the share price performing at the moment? I think we have it at 545.
For me, my opinion is I expect it to maintain at that level. I don't see it going past that.
And of course, it's a company that issues some very good dividends, and for those who chase dividends, it's something that they look out for in that counter.
Yeah, exactly, because even the company, they've maintained their interim dividend payment at 3.5 shillings. For investors who are keen, for the investors who already have a position in that stock, for them it's a good earning out of it.
All right. Let's look at the fuel review that we had yesterday, fuel price review, whereby we saw kerosene going down by about 2 shillings, but we saw diesel going up by about 3 shillings. And of course, diesel is a key driver for this economy. You're looking at agriculture, you're looking at transportation. For you, what do you read into these numbers? If you look at it now from a macroeconomic position, you're looking at inflation, you're looking at the currency. What do you read into this?
This is a very unfortunate move by the energy regulator. Because we know diesel, it's largely used in our economy. As you've mentioned it in transport, manufacturing, and also in the agricultural sector to power agricultural farm machineries. So that increase alone, it's going to have a ripple effect. We know as currently our manufacturers, if they are hit by high prices, they translate that in terms of pricing. So and even inflation, which the government has been really trying on to maintain at manageable levels, this definitely it's going to have an effect on that. So we expect the inflation maybe on month basis to increase. Considering also the government introduced a new levy, the railway development levy at 1.5%, which the regulator will start collecting from this month. So that's also another added cost in terms of pricing. So going ahead, we expect the fuel prices to be high. And even currently right now, the Kenya shilling, as you've mentioned it, last week it closed at 87 levels. So, and even players in the market, they're expecting that maybe the CBK will come in and try to maybe cushion the shilling from further decrease.
And of course, the results are very good at this moment because they're above the statutory 4%, 4 months of import cover.
So, and given that we expect the shilling also maybe to weaken slightly even further if we are not going to see some intervention from the central bank.
And of course, it's a sentiment that even traders have actually mentioned that it's likely to continue weakening on the back of oil imports.
And also as you remember last week, the shilling, it took a hit from the Egypt's market, because you know Kenya is we export in terms of tea export, and last week in the weekly auction market we didn't see that, so it also affected the trend of the shilling.